क्या होगा अगर मैं आपको ये बताऊं कि पाकिस्तान की इक्विटी मार्केट KSE 100 इंडेक्स एक ऐसे बुनियादी ढांचे की तब्दीली के दहाने पर है जो उसे बेमिसाल बुलंदियों तक ले जा सकती है, 1,90,000 से लेकर 2 लाख पॉइंट्स तक। यह कैसे पॉसिबल है? This isn't speculation. It's a calculated, data-backed projection rooted in macroeconomic stabilization, structural reform, and a once-in-a-generation opportunity for investors who act early. Assalamu alaikum. My name is Adil Khawaja, a certified investment advisor in mutual fund industry for over a decade. Today, I'm making a bold statement for KSE 100 index to touch new highs until December 2025. If you're interested in serious investment opportunities, stay with me till the end. And before we begin, don't forget to like this video and subscribe to stay ahead of the next big market wave. The KSE 100 index has already delivered over 93% returns year on year, reaching all-time highs around 167,000 points by late 2025. But this rally is only the beginning. To reach the 200,000 level, Pakistan doesn't need a miracle. It needs the continuation of three forces already in motion: monetary easing, structural reform, and global re-rating. First, monetary policy. The State Bank of Pakistan has brought interest rates down to 11%, with expectations of single digits soon. As returns from fixed income assets decline, billions in domestic capital are set to rotate into equities. This is the liquidity wave that fuels bull markets, and it's already begun. With inflation under control, now at just 5.6%, real yields in equities have turned strongly positive, a critical signal for both domestic and institutional investors. Second, structural reform. Pakistan's ongoing IMF-backed transformation from resolving circular debt in the energy sector to privatizing state-owned giants like PIA is unlocking trapped liquidity, improving governance, and permanently lowering risk. When risk perception drops, valuations rise. A higher PE multiple of just 8x back to historical norms puts the KSE 100 well above 190,000 points. That's not hype, it's pure valuation math. Third, and perhaps most powerful, is reintegration with global markets. Pakistan's recent sovereign credit rating upgrade to B and its progress toward MSCI emerging market reclassification could unleash massive foreign portfolio inflows. Global funds that must track MSCI indices would be required to buy Pakistani equities, compressing the market's current 47% valuation discount and igniting a structural re-rating to new highs. Behind these numbers lies real economic momentum. GDP growth is forecasted between 3.7% and 4.25% next year. As interest rates fall and credit expands, Pakistan's banking, energy, and construction sectors stand to gain the most. Banks like UBL, MEBL, and MCB, and energy players like OGDC and PPL are positioned for double-digit earnings growth as liquidity floods in and cash flow normalizes. Meanwhile, cement and fertilizer sectors, led by companies like LUC, KSE, and FFC, will ride the infrastructure and agriculture recovery. This isn't just a cyclical rebound, it's a structural re-rating of an entire market. The journey from 166,000 to 200,000 symbolizes the world finally recognizing Pakistan's equity market as a serious, reform-driven emerging economy opportunity. But the window won't stay open forever. Once global capital arrives, the deepest discounts will disappear. If you want to position yourself before this transformation is fully priced in, let's talk. I help investors identify high-conviction opportunities across the sectors leading this rally, from financials and energy to growth-oriented plays in cement and fertilizers. Reach out today to explore structured investment options and data-backed strategies tailored to this historic bull cycle. And before you go, don't forget to like, subscribe, and turn on notifications so you never miss the next market insight that could change your investment future. Thank you for watching and take a good care of yourself. Allah Hafiz. On-screen text: Pakistan's market is evolving. The question is, will you evolve with it? Contact